All right. All right. First, this is my first time running through this, so um, yeah. If you can hear me, put a one in the YouTube chat. Can anybody hear me at all? Okay, cool. All right. So, um, with this, we just gonna. It's basically like practicing, right? We're just gonna chart and chill. It's echoing. Oh, so I guess that is because of my phone. So let me see how I make this work. I'm still learning, Carmen, so I don't know how to do that yet. This is literally my first like go live, so I'm gonna learn, right? I'm gonna figure it out, I promise. But um, yeah, this is my first time, so it's playing from two different places. Yeah, no, because I'm not in anything else. Hold up. All right, how about now? Are we still hearing the echo? We still hearing it? Or are we good? Okay, okay. So I think I know what that was. So so I'm using a program that wait, let me see if maybe if I pull the chat out and then I'm trying to figure this out, y'all. Bear with me. So maybe if I do like that, nah, but it stays there. All right, well we'll have to figure it out. Yeah, I'm gonna have to get my guy from work who showed me this thing so I can know how to like utilize this properly. Because if I click, yeah, nothing's happening. All right, cool. So I'm gonna have to figure it out. Um, so the problem is I can't see the chat while I'm doing this, but I'm gonna figure it out. All right. Um, so basically, what I wanted y'all to do. This is my first time going live, so we're just going, kind of. I wanted to test this out and use it as an exercise. Hence the reason why I'm kind of starting so late. This is not a teaching session in any way, shape, or form. This is basically like throw out some tickers and let's just start practicing charting. I'm not going to go all the way down to the daily. I'm going to just show you the quarter, the month, and the weekly. And I think that repetition, as well as me showing you broad informations, is going to help a lot with your charting as well too. So what I've tried to do is I've tried to clear um, basically all my other indicators. I'll leave that. Let me clear this. And I'll leave the strat assistant up as well too. But I'm gonna clear all that. This is just a practicing session. It's not really about me calling out any plays or anything like that. So give me a second. Let me switch back over to the other screen. Go ahead and just put in some. I'm gonna start with QCOM, but go ahead and start putting in some tickers. Um, and then what I'll try to do is I'll stop after a little bit and I'll try to review all of the questions that you guys may have as well too, and then we'll go from there. So, okay. The volume is low. See, I don't even know how to change. No, it says my mic is all the way up. Yeah, everything's all the way up. So, um, I guess that means I'll need to invest in a headset. Um, so we'll go ahead and I'll look into that. But and I also kind of got to talk low because where I'm at, it kind of echoes, and I don't really want my 3-year-old to wake up. Love her to death, but she was such a monster today, boy. Whew. Love that little girl, but good lord, if y'all parents know when y'all kid figure out that word no, how much they love to use that. All right, so I got Neo. Let me write this down. All right. So I'm gonna go ahead and start with QCOM, and then I'm gonna work to NEO. Then we're gonna go to UNH, and then we're gonna go to Nike. So first with QCOM, again, you always want to start off. You always want to start off looking. Actually, would it be best to do the quarter? Not really. But normally, whenever you're doing your charting, you do want to start off with the quarter first, so you can understand what's going on, right? You want to know where your levels are at, right? So you're always going from, excuse me, you're always going from a low. There we go. For the bottom of your broadened formation, you're always going from a low to a previously higher low, right? So you're going from a lower low, right, to a previously higher low, okay? And then on the top of your broadened formation, you're going from a high to a previous high, right? So I chose this because it is just slightly higher than this 3 candle here. So you're going from a high to a previously lower high. So when you're all done drawing out your broadened formation, it should look like a megaphone going to the right. And what will help you to see that is if we take away the line extension, right? So it should look like a microphone, excuse me, not a microphone, a megaphone going to the right. Let me stop there for a second. Okay. All right. So what I also like to do, especially for those who are starting out, it's also a really good idea for you to color maybe or change the thickness of your lines depending on your time frames that you're drawing your broadened formation on, so you know where they belong to. So for example, for me, I have the quarterly broadened formation that is all white, and I think it's level 4, no, level 2 thickness, right? Right? But for my monthly, however, right, I could draw from there to there. That's technically a broadened formation, right? And then I can change that and it'll color it red. So that'll tell me like, okay, this is a monthly broadened formation, right? How do I know that it's a legit or, pretty legit broadened formation? Is because if you trace it backwards, you see it's also being respected on the other side of the broadened formation as well too. Remember, you have to think of broadened formations as support and resistance, right? Not just as exhaustion tools, right? So if you see that on this side, while it's below this broadened formation, you see it used it as resistance and bounced off of it, right? And bounced off of it again until we finally crossed up with this 2 candle over here. Now, this same line is now being used as support, right? So you have to look at broadened formations like that, which is why um, you'll see like tickers that once they do cross above or up below a broadened formation, if you notice, they usually come back to retest that same broadened formation at some point, and if it's legit, it'll stay as it'll stay as like, for example, if it crosses above, it'll stay as support if if it's legit. If not, then price action will cross back below, and then that broad information stays as resistance. Um, so for the monthly, actually my monthly broad information is pretty much the same as my quarter. It's very similar. So if that ends up confusing you, honestly, you can probably just erase it so that it doesn't. If the monthly and the quarterly broad informations are quite similar, then I'm not really going to, draw both of them at the same time. For beginners to the strat, it's really good to do that though, because you want to just know where your lines and know where your broad informations and know where your support and resistance is going to be for those. All right. So, my bad, I forgot. For the quarter, before you move into the monthly, you want to go ahead and mark out your entries, right? And this is especially important for you swing traders, because depending on how far out you are trading, like how far out your contract is, you want to know what your levels are, where your entries are. And then you also want to know for both sides, depending on which way price action is going, you want to know um, where your targets are, right? Or magnitudes, if you will, right? So on the quarter, my quarterly entry is 127.57, right? We take the quarter up once price action goes above 127.57. If it goes below 101.47, we take the quarter down. And if it does trigger either one of these, then I know where my first target is on the quarter. So if I'm choosing a contract that is, 3 months or so out, then I know what's my first target that I'm going to look at, what I'm going to be looking for. And in this case, if we triggered on QCOM, if we triggered 127.57 up, then we know we're targeting 140, right? You can also draw a second one as well too, so you kind of know, okay, if we do get above 140, where's our next target, right? And as it continues going up, you keep marking out your targets so you know where your potential take profit, um, where your take profit signals are pretty much, right? Each magnitude is a take profit on the quarter. All right. But let me just keep it simple and just only work with one target for right now. So for right now in the quarter, our first target is 139.94. Then we'll move into the monthly. And again, you want to just simply mark out your targets. I'm not drawing another broad information on the monthly because, again, it's very similar to the one on the quarter. Right? But strat-wise, you want to be prepared for both sides of it, right? So you can make money both ways. With the strat, really for any strategy, but for the strat, you can't be biased. We have no bias whatsoever when it comes to the strat. We may think something is going up, we may think a ticker is bullish, we may think a ticker is bearish. However, we still are prepared either way with zero bias, right? So we basically take what's given and we only trade what we know to be true. So if, in other words, if all the signs of a chart is telling you, oh, it's bullish, but then all of a sudden sell-off starts happening, you shouldn't be like, well, I'm just going to wait for it to reverse and head to the upside. If price action is telling you that it's bearish, then again, we trade what we know to be true. Sorry, just checking to see if I'm missing anything on the chat. All right. Now, after the monthly, then what you're going to do is you're going to go straight into the weekly. And before you start marking out your entries, take a look at the week and see where you can draw broad informations, right? So I'm already seeing one from this 3 coming back to this 2, right? That's from a low to a previous low, a previously higher low, right? So low to a previously higher low. And then up here, we have from a high to a previous high, a lower previous high, right? So again, for those of you that are struggling with broadening formations, just remember that a broadening formation shows price expansion, right? With the strat, right? What we know to be true is that price is always making higher highs and higher lows. No matter what time frame you're looking on, price will always be doing it. It's always going to be expanding and making higher highs and higher lows. Hence the reason why your broadening formations need to do that as well too. They need to be expanding outwards because price is always making a higher high and a higher low. Now, I don't know when it's going to happen, but at some point, price action is going to expand past 139, excuse me, it's going to expand past 139.94 and make a higher high. And again, I don't know when it's going to happen, but at some point, price action, maybe months from now, hell, even next year, or even 2 years from now, price action will eventually come down and make a lower low below 101.47. Okay? Price is ever expanding. If you don't believe it, a really good, just jumping to it real quick, a really good look at that is snow, right? When snow first started out, you see how it expands to the upside, except for this one, but it will eventually get above this, but then it expands below its original low, right? Made a lower low, then it expanded up, making a higher low here, then it expanded down, making a lower low. So now we're working to the upside to make a higher high. Actually, NVIDIA would be a good example of expanding and making higher highs as well too. Now, NVIDIA hasn't made like lower lows, I mean, from the beginning. I don't think it'll ever get back down here, but this is still a good example of it making lower lows and then higher highs. It just continues to expand out. Back to QCOM. All right, so with QCOM, again, I said I was going to stop at the weekly. And again, I drew out my broad formation. So all I need to do at this point is draw out my weekly entries. So that's my weekly entry there, right there. And then this is my weekly put entry there. All right. Now, what I would say is if your weekly entry, excuse me, if your weekly target is your monthly entry, then frankly, I wouldn't change this and add another line, putting weekly target. Or maybe I would just rewrite, maybe I'll rewrite like weekly price target or something like that. But because my weekly as well as my quarterly entries are both weekly targets, I'm not really going to rename them. But now you kind of have it mapped out, right? If we take the week up at 123.42, our next target is 125.40, and then after that, our next target is 127.57. And then again, on the weekly, you would just keep walking it up, right? Depending if you're trading on, if your contract is like maybe a week to a month out, then you're probably going to want to use weekly targets. If your contract is a month to 3 months out, you're probably going to want to use monthly targets, right? If your contract is 3 months to 6 months out, then you're probably going to want to use just the quarterly targets, right? You'll enter possibly after a daily entry or a weekly entry, but you'll probably want to use quarterly targets. All right, that's QCOM. Let's move over to NEO real quick. So NEO's actually, I mean, it didn't quite come all the way down, but NEO was a really good example of expanding price action as well too, right? So because we started from here, making, change that, from a high to a lower high, right? And then over here, now we didn't, we didn't come down and make all-time lows, but we did make lower lows on the way down, right? So a low to a lower low. I mean, excuse me, a low to a higher low, right? So as you can see for NEO, looking at it on the 3 month, it's a lot of room to grow, a lot, right? Now again, for NEO, we don't know when it's going to happen, but we do know that, when it does happen, NEO has a lot of room to grow, and eventually at some point, it's going to take out this higher high all the way up here at 66.99. So at some point, we're going to see NEO in the 70s. I would imagine probably after 2025 or something. Excuse me. One second, y'all. Sorry. Okay. Sorry about that. So let's go ahead and mark out our targets, right? So on the quarter, right? And again, you just mark out your targets on the quarter. You know that your quarterly entry is 1051, right? On the put side, we know that NEO takes the quarter down below 7. Like, it's crazy to think that NEO would ever, like, especially if you were trading NEO back in 2020, it's crazy to think it, but it happens. Like, this is just but a short 2 years, right? Like, let me see, in 2020, yeah, in 2020, and then heading into 2021, NEO was all the way up here. Short 2 years later, it's about to go below $7. Right, so if NEO somehow reverses and takes the quarter back down, then your next target on the quarter is actually going to be down at $2.22. So if NEO takes the quarter down, your target should be somewhere around here for $2, right? If NEO takes the quarter up, which it has, it's just not currently in force, then your target is $13.22 right there. Right, so for those of you NEO traders, that 13 call wouldn't be a bad thing to look at, right? That 13 call for probably September, or possibly, if you're looking at like end of year, I'll probably go after that 15 for end of year, possibly the 20s, because we know with the Chinese tickers, like they can run, right? We know what the ATR is, but we also know that they can run. So, some things to look out for. Now, on the monthly, right, our monthly entry is here. I'm going to stretch it out a little bit so you can see the difference. So our monthly entry is 1021, right? And again, we've already cleared the monthly entry. So right now we're 3-2 up on the month, currently in force on the month. And our monthly put entry is actually the same as our quarterly put entry. So I'm not going to add another entry to that, because it just don't make sense to me. I like to try to keep my charts as clean as possible. Okay. I'm also not going to redraw the broad information, right? Because it's pretty much the same as what I'm seeing on the quarter, except for here for the top. I would draw my monthly broadening formation at the top from there to there, from a high to a lower high. Okay, so you know on the monthly where your broadening formation is and where NEO could potentially find some exhaustion if you are trading based on the monthly. But as you can see, um, what is it? 8x calls it risk to reward. Better risk to reward to the long side, right? Even though you may not have any triggers right now, but NEO's better risk to reward to the long side. A lot of upside for NEO, right? So now you just mark out your monthly targets, monthly magnitudes right there. So we know our first monthly magnitude is 1237, and then our second one, which is also our first quarterly magnitude, is 1322. So if anybody's really traded NEO, you know that NEO has potential, if it does get close to, like, let's say $12, has potential to take out the month and the quarter. Most likely it's going to happen probably in the same week when it does happen, right? And then again, you just keep marking out your targets, right? If you still have a lot of time left on your contracts, like let's say you go for example, the 15 call for like September, right? But NEO takes out the 12 and the 13 in like end of month, right? Then again, you don't have a reason necessarily to get out of those contracts per se, and you just keep walking up your targets. And as NEO keeps hitting them, you make decisions at that point. Should I get out of the trade? Should I stay in it? Um, and go from there. But I would say if you're hitting your targets early in your contract and you have a lot of time, um, yeah, I would say hold on to it for sure. All right, so then skipping over to the weekly. Now on the weekly, I will draw a broadening formation, right? So you should be able to start seeing them by now, right? From a low to a higher low, right? So we have the weekly broadening formation there. And then on the flip side, on the high side, we have from a high to a previous high. So we know that at least for the weekly broadening formation, there is potential for some exhaustion once we break this high, which is above 1132. Now, it doesn't, I just want to be clear, it doesn't guarantee that price action is going to immediately exhaust and reverse off of this, right? Remember, broadening formations, you have to look at them not just as exhaustion tools, you also have to look at them as support and resistance. So technically, it doesn't necessarily guarantee that once it hits, it's going to immediately come back down and come back through the range, right? Oh, my bad. What it could do is something like this. Break through, come back, and then keep going up. That is a TTO, right? Or it could also break through, come back, but then keep coming back down through the range. Okay? It's no different than any other support and resistance lines. Support and resistance lines don't mean that they can't be broken. It just tells you where the levels are potentially and where you have a potential for exhaustion. But remember, you don't do anything until you get the actionable signal or the reversal. All right, so that's NEO. I think UNH is next, so I'm gonna move right into that. But yeah, I mean, this is going to seem a little boring, but it's the repetitive nature that's going to, well, the old cliche, practice makes perfect. I don't think anybody can be perfect at anything. I just think practice makes you better, right? So Yeah. So for UNH, there's actually multiple broad informations, and you don't always have to have just one broad information. Um, there's actually a couple here, right? So turn this back on. So for UNH, from a low to a higher low, boom, there's also one down here from a low to a higher low as well too, right? You have also from a high to a lower high right there. So there's a broad information there. You also have from a high to a lower high, right? So let me get rid of these two real quick. That's a broad information for UNH. But then you also have a broad information here as well too, with what I drew before. Boom. And then also there, from a high to a lower high. So this will probably, I would probably leave the larger one, erase these, and maybe go into a smaller time frame, because I'm sure if it's showing me here, I'm pretty sure I can find it on the smaller time frame as well too. And then I'll just color it differently on the smaller time frame so I'm aware of what can happen there. All right. Now, for our entries, again, it's repetition, right? So it's going to seem a little boring after a while, but once you get the routine down pat, after a while, you won't need to draw all these broad informations on all these different time frames. After a while, your eyes will just get used to it and you already see it before you have to draw it. You can just look at the chart and see automatically, oh, there's a broad information right there. Boom. So we know on the quarter, what is our quarterly entry? 530.45. We know our put entry, 445.68. We know that UNH is currently given Holy Grail 3-1 vibes on the quarter. We also see that it didn't necessarily cross the put entry, but it's exhausting around the same exact place that the 3 candle exhausted from the bottom, from the lows as well too. Now on the monthly, right, our put entry is the same as the quarterly put entry for the month, so I'm not going to redraw that, but I will put in our monthly entry to the upside, right? And I don't know if this is a rule. If any other stratter that's possibly on this live, I've just been noticing whenever like you have, you know, targets or entry points that are both the same on different time frames, and usually the more time frames that have the same entry, it's like there's more support there, I guess. Like, so if you had, you know, a put entry that's the same as the monthly put entry, which is the same as the weekly put entry, it's like I've noticed price action tends to find that more as support and it'll reject off of that point and keep heading up more often than not. And the same thing for the top side, right? If like your monthly call entry was the same as your weekly call entry was the same as your quarterly call entry, like it just that acts as a stronger resistance point as well too. I don't know, something that I've noticed. I don't know if it's like an actual rule or whatever, just something that Tensho has noticed on his own. So if that is a legit thing, yeah, please don't hesitate to educate. So again, on the monthly, we're looking from a lower low to a previously higher low. So I'm going to change it red, right? And again, you don't have to use the same coloring as me, but I think the different colors and the different thickness in the lines will help you, especially for those that are new, right? And then on the upside, right, we have a higher high, the top of this three candle to a previous high, top of that two candle, which is a previously lower high, and there you go. So you now have the top of your quarterly broad information. You also have the top of your monthly broad information. And you know what your targets are, right? Monthly uh, monthly call entry is 502.90, so you know if price action gets above that, we're taking the month up and going 3-2 up, right? From that point, then we got 530, which is the quarterly entry, but also your first monthly price target, right? And then after that, your secondary monthly target is up here at 553, which is right around the first quarterly target at 558. All right, and then I'm gonna go ahead and go to, do I enter off ones? You mean insides, Brian? Oh, that comment got deleted. Oh, my bad. But if you mean like, if I think you're asking, do I enter off inside candles? Inside candle is an actionable signal. So yes, if the next candle, for example, right now, the one candle, like let's say the week ends right, or let's look at this one candle right here, right? So you got a double inside. Let me just use this real quick, right? So you got a double inside so far, right? So if you were marking out your targets, that would be your weekly entry right there. And then this would be your weekly put entry right there, right? So once the next candle breaks either the high or the low of this candle, that's your entry, right? It wouldn't matter what time frame, right? Because, like if this was a daily time frame, you would enter off of the daily inside candle. If this is a weekly, you can enter off of a weekly trigger as well too. You can even enter off of a monthly trigger. But bottom line is the one candle is an actionable signal, right? It's consolidation. That's the story that it's telling you. It's consolidation. Nobody's really in control at this point, right? Because even though this one candle is bullish, look at what happens next. There you go, right? So we don't ever want to assume when we're looking at one candles that, even though the one candle is pushing up or is pushing down, we don't ever want to assume that the bulls or the bears are in control. What we can assume is what we know to be true, and that a one candle means consolidation. No one's in control at that point in time. I hope that answers the question. Appreciate it. Okay, good. I did answer the question. Ha, cool. All right. So back to, let me turn off the bar rewind. By the way, bar rewind is the shit. So if you don't have it, I would highly recommend it. Yes, it's a part of the paid version of TradingView. So unfortunately, so I believe it is. Yeah, I believe it's part of the paid version of TradingView. So yeah, got to pay to play, but it is definitely worth it. Okay, so back to weekly entries. And again, it's just like I said, repetition, right? Weekly entry to the upside, weekly entry to the downside, right? And then also mark out your weekly targets. And again, this helps you, like if let's say you originally have a plan to, all right, I'm gonna jump in a contract that's 3 months out, but let's say you change your mind, instead of having to go back to the charts and rechart everything out, you already know what your targets are. If you change your mind and say, you know what, I'm just gonna play the weekly instead, right? So when price action gets above 485, instead of me going after a monthly entry or a quarterly entry, I'm gonna go after this 495 right here instead. I'm gonna do that one instead, right? So that way, now you don't have to rechart out everything. You know, like, okay, if I'm gonna trade just the weeklies, then I know what my target is. If I'm gonna trade just the monthlies, then I know what my target is, right? If it triggers the month up 502, my next target is 530, right? If it triggers the quarter, which is 530.45, then my next target is 558.10, right? So you know, based on your targets, and this is why we mark them out like this, so that we know, like, okay, if I'm entering something that's a weekly contract or maybe something 2 weeks out, then I know what my target is that I'm looking for. I'm looking for it to hit 495, right? So anyway, I hope that makes sense. All right, so that's UNH. Let me see, I have this written down. So next we got, what do we got? Nike. Oh, this is old stuff. My bad. Let me clear all that out. So bottom of my broad information, from there to there. There we go. Top of my broad information. So Nike smack dab in the middle so far, on the quarter at least, right? So and then again, just repetition, right? Mark out both sides. And at least in the very beginning, you do want to mark out both sides, right? After a while, the hope is that you get good enough that you can kind of have a real good hypothesis on where price is going, right? Because you're looking at your multiple time frame analysis, you're looking at your full time frame continuity, you're paying attention to broad informations, and again, you not again, sorry, yeah, with all those time frames, when you combine all that together, it should give you a pretty good idea of where price might be going, right? You don't anticipate though. Let me be clear on that because that's bias. That's why we wait for those entries. That's why we wait for, price action to confirm what we believe, what we think may be happening. We don't just anticipate and say, okay, well, you know, it hasn't done it yet, but I know that QCOM's going here, so let me go ahead and jump in now. That's not a good idea. Right, so quarterly entry 128.68 for the call side, quarterly price target 131.31, right? And then our second target is 139.14. I'm marking out the second target because the entry and this are so close together that it's more than likely, once this gets broken, it's probably going to break the 131 shortly thereafter. To the downside, if we break to the downside, that's going to be your secondary target as well, right there at 77.16 for Nike. All right. Now, on the month, so on the month, our monthly put entry is the same as our quarterly put entry. Oh, wow. Nike's actually setting up for a 322 rep strat. Ooh, look at you, Nike. I see you. I see you. Yeah, y'all may want to put Nike on your watch list. So, Nike monthly call entry, right, would be 114.76. we're not going to draw a secondary target because our first monthly target is actually our quarterly entry. So 114.76 to 128.68. Now on the put side, if we trigger to the puts down, then our first monthly target is going to be down here at 88.72. And then again, actually, before I continue on, let me see. It's going to make a steep line, but that's the broad information there on the month. And then from there to there, right? Lower low to a higher low, higher high to a lower high. So that's the confines of your monthly broad information. And again, Nike's still smack dab in the middle of it. So there's room to the upside, and then there's also room to the downside. Now on the weekly, damn it, it's got a double. Ooh, Nike cooking up something big. All right, so we got the weekly entry at 109.13, and then we got weekly put entry at 104.25. I'm not gonna draw out the weekly target here because again, if Nike breaks below 104.25, it's definitely going below, or it's gonna take on 102.90. So instead, what I'll do is I'll mark out this target instead at 101.68. Excuse me. Now, to the upside, there you go. That's your first weekly target. So again, if you decide to trade Nike like on a weekly, right? So just let's say end of week, right? If it triggers your daily, then you know what you're shooting for. You're probably shooting for that 110 call because it's close to the 111. Or if you want to hit it right on the money, probably look up to see if there is a 111 contract. But the 110 call probably would be nice because then if it hits the 110, excuse me, if it hits your weekly price target, you're already above the 110, probably past the break even as well too, and then you got room to run. And yeah, if you want a run information, and actually that's a low to a lower low right there, and then actually that's not that's still a part of that. So technically, go from there to there. Broad information on the weekly as well too. But yeah, Nike's got some room to run up. It's really do. Let's see if there's any questions. What is a 322? A 322 is a strat combo. It is a 3 candle, which is an outside candle. I think you're referring to when I said a 322 rev strat. So a rev strat, a 322 rev strat is a 3 candle followed by a 2 down candle or a 2 up candle, and then the secondary 2 candle is the reversal, right? So let me see if I can, give me 1 second. Check my scanners real quick. Let me see if I can find one really quickly for a 322. No, it's not there. So, here we go, right here. This is a good one right here. So this is a 322 rev strat. 3 candle, followed by a 2 down, followed by a 2 up, right? That is a bullish rev strat to the upside, right? Now a bearish rev strat, 322 rev strat it would be just in reverse. You would have a 3 candle followed by a 2 up candle followed by a 2 down candle. Rev strat. You also have the 122 rev strats as well too, right? Inside candle followed by a 2 up candle followed by a 2 down. That's a 122 rev strat to the downside, and I currently can't. Yeah, I can't find one yet. If I find one, I'll point it out. Yeah, but yeah, the 322s, and you really want to go look up those combos. I think in my first video, if you go through my channel, and in my first video where I talk about the strat, like intro, I think towards the end of that presentation, I believe I show a picture of the strat combos, if I'm not mistaken. All right. I see more of y'all putting tickers. I'm gonna try to get to all of them, right? I'm gonna try, but I'd only meant to like keep this going for like an hour, hour and a half tops. All right. So I'm gonna try. All right. Sal, don't Sal, don't ask that question. You're gonna get pissed off by that answer. You already know the answer to that question. All right. But to his point though, like, yeah, I don't like when I teach anybody in my group, the Trading Lounge, or in the mentorship with Sal. That's one of the things that we're teaching is like we're teaching you to fish on your own so that you don't just take trades blindly. And I'm not trying to imply that the trades that you're getting are bad. There are really great traders out there. But I think it's more important, speaking from experience, I think it's more important that when a trader, right, calls out a play, that you understand the why behind it so that you can make these decisions on your own so that you know when to enter the play, when to get out of the play. You don't have to depend on somebody to tell you when to do that. All right. Okay, so Nike was done. What I see, Roblox. Ooh, I haven't tried that one in a minute. Let me see. A 3 is a broad information. So yes, that is correct. A 3 is a broad information on a smaller time frame, right? So if you see a 3, for example, on a weekly, and then you go back to, let's say, the daily, it's a broad information on the daily. A 3 is price expansion, right? Whenever you see a 3 candle, it's price expansion, right? Because you think about how a 3 comes into play. A 3 starts off as either a 2 up or a 2 down. So it's already broken through the range of a previous candle. So when it goes 3, it is now broken through the other side of that range of that previous candle. And so now it's expanded, making a higher low. Excuse me, I'm making a higher high and a lower low. Top left is 122 reversal. Top left is 122 reversal. If you mean over here, yes. 122 reversal. Rev strat. Yeah. Sorry, I'm just trying to make sure I get through all the questions real quick. I struggle to understand TTO or how to find those charts if you see. Yes, I can tab, but then tab also. I'm not trying to big myself up. There are, let me be transparent. There are other people on YouTube, other great stratters that have talked about the TTO, that have really good videos on it. Okay. Also, I believe I also have a TTO video myself in my channel. It's like probably like maybe 9 minutes. It's really quick. So if you want to watch that at some point, yes. But again, if I do run into a TTO, yeah, I'll show you. I'm not going to deep dive into it too much, but that's exactly how the famous NVIDIA play, that's exactly how we knew where NVIDIA was going. The TTO. Yes, you do. It's 7 minutes. Thank you, Alejandro. Um, oh shit, I was wrong. It's 7 minutes. Yeah, when I first started the videos, I'm like, I don't want it to be like the intro video. I knew was gonna be long. So was the second video. I knew it was gonna be long, but I'm like, every other video after that, I recently had to stop because work kind of got busy, but I will start back up with the different strat things again. Um, I'll try to like I'm trying to keep them like short, right? Because I know we're all working people. Some of us got kids, so it's hard to like sit down for an hour, hour and a half. With that being said, thank y'all for. I know it's Monday night. A lot of y'all got work tomorrow, but a lot of y'all, in here still with me, so that's cool. All right, so back to what do we got? What do we got? What do we got? Roblox, right? So, well, look at you, Roblox. You've been doing your thing, huh? I talk to my tickers. Don't judge me. Actually, I don't care. Judge me. Um, all right. So yeah, this is actually quite simple, right? From a low to a higher low, and then on the upside from a high to a lower high. There you go. There's your broad information on the quarter. I'm just going to move a little bit faster just in an attempt to try to get through all the other tickers, but I will still be here to answer questions, etc. Right? So, um, and then you have again, you got your quarterly entry. We also got there as well too. And again, you don't have to do it like me. I just make different templates, for different things so I know what's what. So at any given time, if I come back, like let's say I decide not to trade Roblox, right? And I decide I'm going to come back to it later, then depending on where price is, then I know like, where to pick up from where I left off, right? So that's the quarter right there. Monthly. So we've already taken the month up, right? Monthly entry, boom. We've taken the month up on Roblox. And there we go, right there. So our first target on the month is actually going to be the quarter entry. So I'm not really going to, draw that. And same thing to the upside as well too, right? First target on the month is actually going to be the quarterly entry. And then actually the next target on the month is actually your first quarterly target. So no need to draw anything extra there at all. So, um, and then also for me, like, I mean, I can technically draw monthly broad information here, but when I notice, this is me personally, again, this is not a strat rule, but when I notice that price action's been kind of like trading in a range in a box, if you will, or a rectangle, if you will, I kind of wait until that rectangle's broken before I like draw the broad information, whichever side it breaks to, and then I'll go ahead and draw it because right now it's just in a box. It's like for me, I find that it's pointless to draw a broad information at that point because until it breaks one way or the other, price is just basically consolidating in a range. It's not expanding to the upside or to the downside. So for now, for me, I would just leave the quarterly broad information where it is and, leave, again, just leave the monthly broad information the way it is. Don't even draw it just yet. Now, I will still look for a broad information on the weekly though. I'll see what's what. Something to take note of. Yeah. All right. So, So from a low to a previous low, right? So we got from here to there. There you go. That's your weekly broad information, bottom side, right? And then from a high to a, let me see, which one's the higher one? I think it's this one right here. Yep. From a high to a previous high. And so there's your weekly broad information. So you know that you have potential exhaustion coming up. Again, this doesn't mean that price is going to hit this weekly broad information and bounce back to the downside. You don't want to assume that, right? Let price tell you, let price action tell you what it's going to do before you make any moves, right? Because again, broad information is just support and resistance. It's not just signaling exhaustion. You wait for the exhaustion to happen and then you wait for the subsequential reversal to the downside. Or if it's at the bottom, you wait for the exhaustion and then you wait for the subsequential reversal back to the upside. Okay. For the weekly, there is my weekly entry there. And then the weekly put entry there. And then my first target for the weekly to the downside is actually going to be down here at 37.63. And then actually no, my first weekly target on the week is actually the quarter entry at 47.65. So, you know, again, this is where I'll be targeting them, etc. So now you have all your broad informations, you got your targets marked out, and yeah, go from there. You can even take note of, right? So if it does break through this broad information, take note of the previous broad information over here as well too. Because if it does break through that, it might find some resistance off of this one. You can have more than one broad information. As a matter of fact, there are more than one broad informations on charts, if you didn't know. Let me see, I'm sorry. Yeah, Sal's right. Usually when price is consolidating, once price makes up its mind and goes either up or down, it's usually a pretty decisive move in that direction. All right. So like if you get like, and this is the reason why you hear people, I mean, I'm sure you've seen it in your own particular discords, or if anybody's in mine, like you know how excited we get when we see like double in size or triple in size because we know like that ticker is getting ready to make a pretty decisive move. As a matter of fact, what comes to my mind with that is the XLV sector. I believe we're triple inside on, is it the month? There's one of them. I think we're triple inside. Ah, here we go. It's the quarter. XLV is triple inside on the quarter. I don't know when, but that shit's going to make a move. And it's going to be a very decisive one. And I really think my bias is to the bullish side, but obviously I'm not going to just anticipate and jump in early. I'm waiting for it to give me signals. But yeah, when it finally does blow, this shit's going to explode, in my opinion. And the thing is, as much as XLV has been getting his ass kicked lately, it's actually not that far away from taking all-time highs. It's literally only $8. I'm sorry, not eight. I'm sorry, my bad. It's literally only $12 away from going back to all-time highs. So all those XLV tickers that have just been getting their ass kicked, I'm not saying jump into them, but boy, when this sector finally goes off, whew, a lot of money to be made in that sector, boy. Um, oh yeah, I'm in AbbVie. I'm down right now. Totally transparent. I'm down right now, but um, That's actually a good point. If I could just bring up real quick trading psychology, right? For those of you that may be feeling bad about your trades, I don't know who you are. I'm just gonna, talk, right? Um, just please remember this, right? Once you enter that trade, anything and everything else that happens after that trade ain't got shit to do with you. What I mean when I'm saying that is you can see the most perfect setup, right? The most perfect setup, and it still doesn't go your way. That in no way, shape, or form is a reflection of your skills as a trader. It has nothing to do with whether you're a good trader or a bad trader. The market is a living and breathing thing. It changes its mind more than, you know what? Let me not say that. But it changes its mind a lot. I was about to start some shit on this live stream. Can't be starting shit on my first live stream. Um, but it does change its mind a lot. All right. So please don't attach your trade results to your ego or directly associate them with your skills as a trader. All right. Okay, so I think I'm gonna do one, maybe two more, and then I think I'm gonna wrap it up. Thank you so much for those who are staying with me. This is my inaugural live stream, so I really appreciate the fact that you're along with me. Um, Potential got a story about I got a story? About what? Did I tell a story before? You know what? Let me not bite into it. All right. So I saw Apple Next. Somebody in this group kind of hates Apple, but I ain't gonna say no names. I ain't gonna say no names though. Um, I don't know why though, because could have made a bag off of Apple because of your boy was screaming Apple all-time highs for a minute now. But just saying though. He know who I'm talking to. uh, I'm gonna get him on Apple one day. I will. All right. So with Apple, I actually I haven't traded Apple in a while, but I did get in it for the all-time highs. I had a certain target. Once it got into that target, I took my money and I got out. Right. I knew Apple could potentially continue going higher, but I was completely okay with just taking my money and getting out. Um, Apple may actually hit that 200 call. Maybe not this week, but at the rate that it's going, um, I would probably say it's probably going to do it. Probably I would probably say the 200 call for August 18th probably wouldn't be a bad choice. Not guaranteeing anything, but it probably wouldn't be a bad choice. Right. So, all right. So you mark out your targets, right? We already got the broad information drawn. You mark out your quarterly entry. You mark out your quarterly put entry. Boom. Now, for all-time highs, you don't have any targets. All right. So this is what, if you've never watched her videos, it's really important that I think you should. You should watch Sarah Strat Sniper. She's on Twitter, on YouTube. She was I don't know her personally, but she was a really, really, really important part of my learning and understanding when it came to the strat. Um, this is not an exaggeration. I used to watch her videos over and over and over again on the weekends. And I don't know, just the way that she explained things, I got it. I understood it. Um, Her and the Strat Uchiha, Ray, y'all probably know him as Ray, really, really, really like solidified my understanding of the Strat. So everything that you're getting from me now comes from them and others, but it's mainly those two that have really helped a lot with that. All right, so on the quarter, actually, I'm sorry, I am wrong. We actually have a new quarterly broad information. It's there. My apologies, right? We made a higher high, so we actually have a new quarterly broad information. And again, what can happen here doesn't mean exhaustion, right? Apple's probably going to make a higher high before this quarter is done, right? So it's still good to have it because, again, remember what could happen with the broad information. Price action can go above, come back, retest, and then be out. NVIDIA is a perfect example. If I still had that broad information drawn, I would show you. NVIDIA was a perfect example of that during its run up. All right. Okay, so coming back to monthly. So the monthly, the monthly call entry is the same as the quarter. So I'm not gonna redraw that, right? Somebody was asking me about a TTO, right? Here's your TTO, right there, right? Run up, corrective activity. Actually, let me do it like this. Run up, corrective activity, boom, right? Now watch this. Where is it? Nope, not there. There. First triangle. And second triangle. There you go. There's your TTO. TTO just stands for triangle day out, but just to keep it in the simplest terms, a TTO is a pullback and then run up. It's corrective activity, right? You get a run up, corrective activity, forming the first triangle, right? And then reversal back to the upside. And then there's your secondary triangle. Boom, we out. It would have, in order to TTO, it needs to take out the high, which is, let me change that color to white so you can see it. Oh, damn, hold up. Boom, let's do that again. That's solid and white. There you go. So the TTO needs to take out 182.94, which it did, and triangle day out, right? So once you get that TTO, you usually see that explosion to the upside. And again, the TTO can be to the downside as well too, but usually once that secondary, once it takes out the high or let's say the low, you'll see an explosion to the downside, and that's exactly what's happening here, right? Let me get rid of some of this stuff. Right, so once it started pushing its way back up, in order to TTO, need to get above 182.94. Once they did, we out. Large green candle. Large one. NVIDIA's another good example as well too, and there's actually a couple others that are forming as well. Meta is forming a TTO as well too, right? So I know I got off track, but I'm coming back, promise. Boom, 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 and we're looking to do that. And where the TTO happens, or where we complete the TTO, as I call it, is above that level, 384.33. So if that happens, oops, my bad. If that happens, why does it keep? Oh, it's locked. Okay, my bad. That's why I care. I was like, what is going on? So if that happens, and you see Meta has a lot of space to do so, you know, we could really see Meta explode after that at 384. All right, coming back to Apple. So So I hope that answers your question about TTOs. But again, um, yeah, please go back and watch the video, right? All right, so that's your monthly entry. We have no targets to the upside, right? But we do have targets to the downside, so we still mark them out, right? And then looking at the weekly, I didn't draw broad information on the monthly because again, it's pretty similar. Um, yeah, no, it keeps making higher lows. So, I mean, technically, you can probably draw it from here, there to there on the weekly, and then come up here, or even back to there, right? But obviously, Apple's not showing any signs of dropping just yet. So that's going to take some time. So for me, if it were me, if I know it's that far up, I'm not really wasting time drawing the bottom of the broad formation on a smaller time frame just yet. I need to see some like real lower lows or whatever first before I do all that. But anyway, you can still mark out your entries, all right? So I think somebody had asked about the 122. Yeah, this is a 122 to the upside because the other one was a 122 to the downside. So here's your rep strat: 1, 2 down, followed by a 2 up. That's your bullish rep strat. So there's your weekly entry. And so you actually have a target on the week. Your weekly target is actually going to be the 194.48, right? That's going to be, actually, no, I'm sorry. Your first weekly target is here. First weekly target is there at 193.88. But honestly, because it's so close to the all-time highs, you might as well just make that your first target. To the put side, there at 186.60. And then first target is there at 185.23. All right. Let me just stop here. I'm going to answer any questions, but I think I'm going to stop here. Sorry if I couldn't get to your ticker. Yeah, who this? Me too. Sarah helps so much. Yeah, stock market mindset. Yeah. You know what? I'm gonna still give flowers to Strat Soldier. He's the one who originally got me on the path because like my very first introduction to Strat was a podcast or something he did with was it TrendSpider? I don't know. He got invited onto to somebody's YouTube and he had his whole presentation and like you know how he talks. He's like very rigid in the strat and I like that because it gave me the blueprint, you know, like my sandbox. Like this is your sandbox, this is what you play. Benziga, thank you, Jeffrey. This is your sandbox. This is what you play in. This is what you can do. This is what you can't do. And for, in my opinion, a beginning trader, you need that structure before you get to play around. The problem, not a problem. Let me phrase it like this. The issue I had as a beginning trader, learning from other experienced traders, is that they had become so experienced that they were taking risk with their own rules. And I'm not saying that in a bad way because I take risk as well too. But the reason why they were able to take that risk is because they knew the rules already. They knew what their sandbox was already, if that makes sense. So for me, I was following them not knowing what the sandbox was or what my rules are. This is what I can do. This is what I can't do. Right. So, um, once Strat Soldier came out with that video, I really just started out pure strat. That's it. I didn't add anything else to my charts. It was just run informations, actionable signals, full time period continuity. Nothing else added to the charts. And then I built off of that. Then I started learning strat combos 1 to 2 at a time. And then I kept building, and now I've been adding different strategies to what I already know with the strat. Alejandro, you're welcome. Make sure to watch your video. Yeah, cool, Tab. Cool. Like, yeah, I'm not here to force anybody to do anything. I appreciate it. It'll help my numbers. I do have a goal with this YouTube. So, anybody watching any one of my videos, it helps a lot. So, how often am I doing? This was my first one, Joanne. So, welcome. Thank you so much for the support. Um, I will probably do it again, but I came into this like as a tester. I really didn't think I would have so many people in on this. I appreciate y'all. I really do. I'm definitely gonna do it again. I don't have a schedule yet. Just so you know, just so everybody's aware, I am an admin in the trading lounge. So I do have, responsibilities there as well too. I can tell you for sure it's not going to be on Wednesdays and Saturdays. I also do a mentorship. That takes up my time on Sundays. So if anything, I'll probably try to squeeze it in on either Mondays, Tuesdays, or Thursdays. And yeah, we can go from there. But yeah, I've been blessed. I don't want to make it about me, but I've been blessed to I appreciate the belief people have had. That's allowed me to teach this, mentor this, be an admin in a Discord, and genuinely just try to help people. So yeah, for those of you in the trading lounge, I'll see y'all tomorrow. Busy man. Uh, you know what? Actually, my job keeps me way more busy. This is actually fun for me. It's like meditation because I enjoy, like, it may sound boring to say it. I enjoy like looking at charts, and you ask anybody that knows me, like I'll probably sometimes be up at like 1, 2 in the morning shooting text messages out, yo, look at such and such. So I actually enjoy this. This is meditative for me. It actually helps me step away from, you know, the other adult shit that we all got to deal with in life. You feel me? So anyway, um, I'm gonna end this like how I end all my other Zooms and whatever. Love, peace, and chicken grease. I will see y'all. For those in the trading lounge, I'll see y'all in the trading lounge. For those of you that joined the live and you've never, you don't know me from any discords or whatever like that, thank you so much. Please like, share, subscribe. It all helps. I appreciate it. And yeah, mentorship people, I will see y'all on Sunday. All right.